All right, what's happening, speculators? Let's fire up the Futures Fanatic live stream for the afternoon of Thursday, December 11th, 2025. As usual, let's start off with the risk disclosure and disclaimer. Just remind everybody this presentation is going to be for educational purposes only. The opinions expressed are those of the presenter. That's going to be me the whole time. Breathing into this mic. All trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account. All right, we're either long or we're wrong, and I've been wrong on fading the Dow Jones for the whole day. Have a manageable loss. We'll take a look at that in just a moment, but I just wanted to spend one moment here on the 4-hour and just show what we got going on here on the Russell and the Dow Jones specifically. So Russell from before Thanksgiving has moved 300 points higher almost to from 2,300 to almost 2,600. And leaving these high nodes in the dust. So this is a short. Okay, that's all I can tell you. It's a short. It's a short now. This is a short. This is a manageable short. We're not building a profile up here. We have a clear shot to move right down to 25.30. We could do that in one day, and then all the way back down here. This is the best thing for bulls too, is to get a little bit of a retracement here. So I am short the Russell on a couple of my live accounts. I'll take a look at that. Obviously, the position is negative right now, and I'm not adding to it, but I started shorting around 25.50s, and we've put on another 40 points today. And the Dow Jones is less of a short. I know that sounds weird. The Dow Jones is less of a short, but still is a short. So still short here too, anywhere in here on the 4-hour. Now, the thing that's a bummer is we do not have an extreme turn sell. It's nicer when you have an extreme turn sell with this kind of separation from the T-line, which we don't have here, but you have all kinds of these high volume nodes that you can pick off. And this basically huge Indian arrow. I mean, it's not perfect Indian arrow, but and what that means is you look to offer liquidity to the markets and fade when we get outside of the value area, which is, I have it set to 78%, not 70%. And then if you do look at the S&P, you can see that it's banging right up against here a level that most likely wants to go higher and get into the outside the value area here as well. That's a close above 69.17, somewhere in there. Anyway, so that's, I don't do a whole lot of higher time frame analysis very often. But for some swing trades, or if you're able to hold a little bit of inventory, we definitely have some short opportunities here. My Kerpos is just short the Dow, and then in some of the prop programs, I'm short the Nasdaq as well. So I'm short the Nasdaq in this prop program right here. Using this as a lead account, I have 5 PAs connected right now, and just trading those from the short side for a look to move down to what could be a long, which is the plus ones down there at 25,643. Now, I don't know about you, but tricky day, I think, tricky day, but we get tricky days all the time. So last night, NASDAQ down about 300 points or so, just selling off really hard, took the S&P with it as well. Dow down not quite as much. And then we pop in today and they do the same thing up, and then a 300-point drop and a full reversal off of about the 25 fours have been defended a number of times. And I was looking for trading between 25 fours and 25 sixes. It regained 25 sixes and then had 800s in its sight. So we'll see what ends up happening. We'll see what ends up happening there. But really, it should just be a relatively boring afternoon. We could just sit and watch this. You know, I mean, there's plenty of opportunities to get long. Someone had asked if I liked, even with the amount of range that the Dow put in today. I think it was Adam or someone said, hey, would you still consider buying pullbacks in the Dow? And pullbacks basically in anything. And I said I would if I didn't have a short position on already. So one of the things that has served me well is working my way out of offsides positions in a mean reversion style when I'm not trend trading. Sometimes I officially do a quick switch if it's a manageable loss, and I'll switch to looking for some pullbacks to trend trade. But more often than not, I try to stick with one side for the most part, especially when we're up in the offer zone. Now, if the Dow Jones had been giving us real nice two-way action today and meaningful movement like the NASDAQ. So the NASDAQ today, I was fortunate to be both long and short a number of different times. Over here on this account, which was near a new equity high and then couldn't quite pull it off. Here's all the trades that I'm working right now on the NASDAQ. But as you can see, I was a pretty active beaver today, right? So buying and selling in here a little bit, then shorted, covered, bought, took it off, take it off. Covered another one, got long. I guess I still had two on. You can see all the transactions. So these are covers. And fortunately, I haven't been short the NASDAQ at all today in this live account, except for last night a little bit. So that's about it. So very active. And I would also like to point out, and I think everyone should notice, look what's happening here. Check it out. We are staying inside of our bands, right? Inside of our bands. Now, I was also long the Dow Jones, fortunately, but not long enough. Just had a couple in here and then closed them out here and here, and that was it. So, so that was a bummer. And in the Dow here over here, I guess I should clarify too. I got so much stuff I trade and just, mess around. We got all the prop programs, which are great learning tools. I have about $75,000 to $100,000 of live capital that I use for these purposes. You might have heard me say the vast majority of my trading in the futures markets is treasuries, and I trade usually options. So had a very nice trade yesterday by selling the 112 puts on the ZN, selling the 114 and a half ZBs. So I did very well over there. But you're here, and most people are watching what I'm talking about here to manage risk in smaller accounts. So I consider these the smaller accounts. And oftentimes, and it is actually oftentimes, there'll be some conflict between what I'm doing in those accounts where I'm position trading a little bit and what I have going on over in the prop programs. So I have no position on here in the Dow. So since I don't have a position on here in the Dow, I am looking for longs on a pullback. But one of the things I do is I try not to get too cute. This is a 34 period moving average. You can use this to trend trade against. The market has not come back to that, and it hasn't even sniffed VWAP here yet. So given all that, it's just a melt up and move. And for the most part, if you're in it, great. If you're not in it, I probably wouldn't mess around with it until it pulls back dramatically. Or maybe I get lucky, and at this point, it would literally just be luck and can work my way out of this unprofitable position. Look at the slope that you have here as well. Okay, so this type of slope does not bode well for mean reversion. All right, there we go. That's about all I can cover here. What else to say? Yeah, Goldman Sachs has been on an absolute tear. Just an absolute tear. I mean, these kinds of moves for a stock that's that big is pretty amazing. Visa too today. So here's look at that. Look at that move in Goldman. Look at this move in Visa. Yeah, it's just I'd mentioned this morning there are quite a few trend following and algorithmic based most futures funds out there are usually just algorithmic, and a lot of them are trend following, and they'll tend to put a lot of money to work after a Fed meeting. So again, I found the price action last night in the NASDAQ a little wonky, but does that, flush out all the suckers in the overnight and then just rip it. Rip it, grip it, and rip it. Up here, what you guys can see also is this is the extreme turn on for 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. And now the condition has come off on this candle. Doesn't mean that it reverses there, but this is often a very good place to take a shot. If you've managed to stay out of this entire move, like I said, the Russell and the Dow Jones are shorts right here at this level. But they very likely are not shorts over the next 40 minutes necessarily, right? So that's the other thing around situational fluency is I think most people that are on this stream and that are trading are probably trading the prop programs, which are day trading opportunities. There was a long time where I had to answer, and there are still people that stick to I can't do this because it's not real because I can't swing trade. If you have a truly profitable position, you're not going to miss a whole lot in the hour that it's closed. So, and you shouldn't be holding losers. So if you have a really profitable position and your whole idea is like, well, now I can't hold this sucks, and another reason that that prop programs are not realistic. Well, a couple things. First of all, you have to have the initial and maintenance margin from the CME, not your broker. So day trader margins go away for that hour between 5 p.m. and 6 p.m. Eastern Standard Time. So that's the first thing. So your silly money that you're working out in the prop programs is not real relative to an understanding of the fact that day margins, when they first started to be provided about 20 years ago by discount brokers, are probably the most evil thing that ever came along. And I create some content on this, and I get these snarky, why interactive brokers, the commissions and the margins are so high. Well, first of all, the commissions aren't high, but the margins are the proper margins. Anyhow, it's very easy to just close a position and then reopen it an hour later. Folks like Apex and stuff will let you hold it all the way till a minute before the close, right? All right. Do we have any questions over here? Yeah, a 5K personal account is kind of equivalent to a 150K prop account, basically. It's equivalent in terms of how you should look at risk and things like that. It's not equivalent in terms of buying power in the real world, in prop, right? Your buying power in prop is inflated by 10x. Do they want you to fail? We can debate that forever. Do you have to fail? Do you have to put on all that size? No, you don't have to do that. I got like almost 100,000 views on a clip that me talking about the NASDAQ and how even in my large accounts I don't like to trade the NASDAQ. And of course the NASDAQ fan boys and girls came out in droves, which I can just tell from their comment that they're just trading simulated capital, which is fine. Does the NASDAQ give you the most horsepower, the most excitement? Did it also probably blow up a bunch of people's accounts today? So look, I said this about crude oil. I'll tell you about the NASDAQ right now. You are not going to make money long-term in the NASDAQ. You're going to borrow it for a while. You're going to feel like you can pull it off, but we can grab this clip too. I've been doing this a lot longer than you have. You are not going to be long-term profitable in this particular NASDAQ right now. The comments are great. It's just he doesn't know what he's doing. That's fine. I know what I'm doing. I'm avoiding the instrument for the most part. And we will take our lumps in the MNQ when we get involved in that. Anyhow, the final thing on this Dow position is if I wasn't streaming today and I didn't have a similar position on in my trade room this morning, I would have just closed it and been done. But now you can watch me do nothing, not manage risk, not do an ad unless we get up to the +2s, and just watch a slow bleed to the upside. So, but what you're watching here is not an example of a prudent, well-executed trade. This thing should have been closed. When I closed, I had a 3 lot on, and I closed. Sorry, I had a. I can't remember the details. I closed one here and closed one here, and then for some reason I got short again here. Lord knows why. I think this might have been the POC right there. Anyway, this thing should have been either closed, take your lump, take your loss, and be done. But for educational purposes, we're going to stick around with this position here. All right, let me ask some questions. I'm going to pop down here. There's some good questions in here, so let me go ahead and get on those. So the first one is you're on a 250, so you need to make about another 7,000 or so. So when you say max size, are you trading micros or are you trading minis? First of all, you can't trade minis. If you're trading minis, you're already sort of doing it wrong. Now I get that they're, look, everyone's skill set's going to differ. Once you understand how to do this, if you want to press your evals a little bit just to get through them, and you know 100% in your heart of hearts that when you have your live account, you're going to treat it properly and size things properly, and even in a $250,000 account, which might have $7,500 of drawdown, remember, it's so insane that we talk about the drawdown number, but we have to, and we look at that drawdown number as 100% of our account, which it is. I don't think there's anyone out there that would deposit $7,500 or $10,000 and think, okay, well, on any given day, I'm going to risk 50% of my account value or 30 or 40% of my account value. On a $10,000 account, your max daily loss limit should be about $1,000 on a real $10,000 account. But let me answer the question. I always go off on tangents. It is your risk and sizing is dependent on your daily risk budget. So it's Maroon. I don't know if you have a daily risk budget. If you don't have a daily risk budget, check my ebook down there. It'll tell you how to identify a daily risk budget. It should not exceed 10% of your starting account value. And that's your risk budget for the entire day. Let's say that was $750. Okay. So if it's $750 and you're trading something like the Dow Jones, which let's say the ATR on the Dow Jones is 500. So 500 points, one contract is $250. That's the entire range. You could trade about 3 to 4 contracts of something like that, and then just make the adjustment for the NASDAQ or the MES or whatever you trade. I know that might sound silly. There's a lot of people who say, oh, I could trade 5 contracts or 6 contracts or 8 contracts. You can eventually, if you earn the right to increase your daily risk budget, which is done by having outsized risk-adjusted returns. In other words, 4 to 5 of your 22 trading days in a month, you have exceeded your daily risk budget. You've made $750 or more. But you can't if your up days are 400, 500, 300, lose 200, lose 300, lose 750, lose 750, lose 750. See how that works? So 10% is just a starting gauge. So I would say 3 to 4 MES, 3 to 4 Dow Jones, 2 MNQ if you're going to trade the MNQ. Well, I 100% assure you that the NQ wiped people out this morning. Full NQ traders. My favorite is, man, I just trade price action, man. Once you learn how to trade price action, I just see the future. Right. You got wiped out today. A lot of people. Maybe not you. Maybe you were short. Maybe you caught the moves in both directions. You knew, okay, we started the day 200 points off of the overnight lows. We're going to go down and revisit those overnight lows again, hold, come all the way back up 300 points. I mean, maybe you can see the future. I don't know. I can't see the future. I can't see the future, man. All right. So speaking of prop programs, what we're going to do is
order submitted, order filled.
These are ones that
Order filled.
if I push it, I can pass them in a few days, and push it would be actually trading 6 to 8 micros or maybe up to a mini. But instead, I do it the way I teach and trade here for you guys. 3 to 4 micros. These are $150,000 evals.
Order submitted. Order filled.
And then take it off and take it off here. Take it off, man. Take it off. Take it off. Da-da-da. All right.
Order filled.
S&P traders, I had been mentioning for a little while, I don't know what this 07 half level is, but it seems like between 05 and 10s, right in there, 07 half. We've been finding some from some sellers in the S&P. Saw it yesterday. Just keep in mind, if you want to push it, and then you know you can switch gears, the way you're saying, then I aim for a $500 day profit, do not think about daily profits. You can look at your weekly results, right? Your weekly results are something I would consider valid. Now, I import only the accounts that are, I import all my live tracking accounts and all of my funded accounts that I can take payouts into TradingView. And I just started doing it again for the month of December. So I don't know, bring this over for a moment. I haven't looked at it. I import it real quick and then move on. I think I've been profitable every day. I think I lost money on Tuesday, I know. And I don't know if I imported yesterday. I think I did. So there's plenty of trade journals, of course, you know. Oh yeah, I lost yesterday. How's this? I did the first 3 months of the year, and then I was like, okay, that's a pretty good run. I did the first 3 months of the year, and then I thought, I don't need to do this anymore. We do our Trader Talk Tuesdays, and most people are journaling now. They're using TradeZilla or something like that, but there's still a whole lot that don't. So I took a big time off from all that over here, and then I'm finishing the year strong here. But yeah, so you know, this is a very good week, and this is what's certainly possible. Now, can you make $20,000 on 20 funded accounts plus four live accounts with $250 daily risk budgets in each of those accounts? No, you can't. Okay, so I have $800 to $880 or about $500 daily risk budgets in all of those accounts. So I have more risk, and I use a fair amount of that risk. Not all of it. In the trade room, I'm extremely conservative. But I pulled this up because the commenter said, then I'll aim for $500. What you need to aim for is managing risk and not losing your $500 or $750 as often as possible, the discipline to have, because your profits will take care of themselves. If you start to think in terms of daily profit or how much you want to earn for the day, a couple things happen. And I have an article on this on my website. You can go to tradersdevgroup.com and check out the Power of Quitting article that I put up on there. Because there is a real power to quitting and knowing when to quit. But daily profit goals are going to put you in all kinds of bad headspace a lot of the time. It's very difficult to manage it as a daily profit. You get a little stuck and you're like, oh, I just want to get even. But then you get back to even and like, no, now I need to make my $500 for the day. Right? Or on the flip side, you're in a great flow state. The market is working well for your particular trading strategy. I like to say things like that, not you're seeing things correctly. That's, again, this might sound semantic, but this idea of seeing things correctly, There's fine to say like flow state or the market is working well for your trading strategy at the present moment. Why would, when that's the case, why would you want to leave a lot of money on the table? Yes, I understand. I feel like I can't even talk freely because there's so many caveats in this weird world of prop trading. Again, still very good learning tools, but consistency rules and things like that will make you have to trade in certain manners when you're up. But once you really get going in these things, a lot of the consistency goes away. Not all firms, not all the time. And of course, when you're in a live account, there's, make as much money as you can, right? Harvest while the sun shines. All right, why do I prefer the MYM? Just read the ebook is a great way. I don't want to go through the whole thing, but essentially it's a lot easier to control. 50 cents a tick, right? I'm talking about the micros. And in all my teaching, it's the best instrument to teach people how to actually eventually learn how to campaign around price, build positions, scale in, scale out in ways that are professional, predictable, and prudent. Whereas the NASDAQ will just get you into places where you're just like, you get frustrated and then you add the wrong places and you're putting on more size and then you truly are adding to losers. And it's much bigger, obviously, $2 per point, and a point in the NASDAQ is like, it's like that. 20 points in the NASDAQ is like that, right? Yeah, I don't have a number where I quit. Not for me. Let me bring up the article. It's actually, I'll pop it in here because I think it might help. So there's two articles in here. The first is all these trading tips that I hear. Most of them are nonsense, so I gave you my version of them. So you might want to read that one. And then the power of quitting is, I think it's here. Okay. We can go through this a little bit here too, which is, so if you hit your DRB, you're done, right? That's your daily risk budget. So you don't have to worry about knowing when to quit when you've done that. You got to stick to your usual trading hours too. So one way to also know when you're done is just stick with your regular trading hours. And that's true even maybe if you're in a flow state or things are going well. You don't need to spend the whole day in front of the screens. If you trade a few hours in the morning and that's been successful for you, in fact, most people will find that they give a lot back in the afternoon. They give a lot back the more they're in front of the screen. And the reason I run my trade room for about 10, 15 minutes before the market opened to an hour and a half or so after the market open, this is the New York, is because that's when you get the most opportunity to trade two directions in most of the stock indices, including also now Bitcoin, gold, and crude oil and stuff like that. So the next thing you want to do is take an honest look at how you made that profit, right? Was it in a consistent manner or did you just get a big windfall kind of trade? If you want to keep trading, you can raise your entry criteria or lower your position size. You can use a secondary DRB as your point to quit as well. So you're up $600 and you say, okay, I'm feeling it. I want to stay at it. Now you establish a secondary DRB and say, if I give back 150, I'm done. Keep a journal. Commit fully to quitting. So one of the things that you do not want to do, and trust me on this, is move from your live account, funded prop account, or even a eval that you're taking seriously, and you should take all your evals seriously unless you're truly just walk forward testing some new strategy that you want to test. Don't switch into sim. Don't do it. Just quit. Don't look at the screens anymore. Don't switch into sim. I have not met a trader, including myself, in 30 years of doing this that can switch into sim and truly just continue really treating it like it's just total bullshit. Now, is there any difference between an eval and your Sim 101 account? Not really, but there is. So don't switch into Sim. Anyway, grab this article. Did I put it in there already? I'll put it in here. Okay, so a couple tips. And the other thing is, I don't write a lot of blog posts. Me and ChatGPT now, I could write a lot more. I write ones when I think there's something that I can really add value and say. So in my opinion, every one of these blog posts is really, really valuable. So if you want really free stuff, how to copy trade, the truth about account sizes and prop, which most of you probably know, how to do multi-prop, some micro agricultural products that are not available in the prop programs, but if you're a live trader, you might want to look at. And then even things like how to unfuck your futures, which is, here's how you do it. You just understand that risk management is everything. You get really hyper-focused on this chart, which I'm sure some of you have seen. If you stay in the 10 to 20% loss, your recovery is simple, especially on high-lever products like futures. If you draw down more than 30%, the math starts to really go against you. And if you do what almost everyone participating in these programs is risk 40 to 50% of their account, then you put the math way against you. It's very, very difficult to ever recover. And then you get into that negative cycle, and it just doesn't work. So anyway, check out my blog. Yeah, good question. If I can speak to this martingale thing, the thing that it's a bummer about DCA, dollar cost averaging rules, and consistency rules, all these things, is that they're very unique, of course, just to prop trading. They don't really exist in the real world. And then the other thing is we're not describing them properly, because like dollar cost averaging is the greatest trading strategy for investment there ever was. I'm currently buying $1,000 worth of ETH every Sunday, and I hope it goes down over the weekend, every weekend. I'm like, shit, this weekend I'm buying on new highs, but it doesn't matter, because buying and hold through a DCA approach, then you get the average price over the course of a year, right? It's great. So DCA is great. The second thing, martingale is doubling your unit size, not 1, 1, and 1. Okay? If you're on a blackjack table and you bet $10 and lost, and then you bet $15 and lost, and then you bet $20 and lost, or you bet $10 and then you bet $20 and then you bet $30, you're not martingaling. 10, 20, 40, 80, 160, that's martingaling. And a lot of people think, oh, they have this table maximum, says, 5 to 5,000. They can handle more than a $5,000 bid, a bet. They want to absolutely prevent the ability for anybody with unlimited amounts of money to come in, because eventually, whatever the math is, you will lose 11 or 12 hands of blackjack in a row, and then you'll hit that where you cannot double your bet again. But back to the question. I can't say with 100% certainty that it's still not an issue. I'm going through a series of evaluations again with Apex. I have five funded accounts there on Rhythmic and 5 on Tradevate, and I'm doing another 5 just to start from the very, very beginning with behaviors that I believe 100% should never violate anything. Now, back to that. I do not know. I just took a $7,500 payout. I know a lot of people feel that that's because they know Rod Casilli and the 100 people that are looking at these payout reports and stuff, and there really is practically 100 people over there at Apex now, are just going, oh, he's an influencer, pay that guy. That's bullshit. That's not that. They don't know me from Adam when I ask for money. And I have had some payout denials for a variety of different things. The one that I dislike the most is the hedging one. Being long and short correlated instruments in the same or a series of accounts. And today would be a perfect example of, if I wasn't paying attention, I could be in that particular situation, because how many times today might you want to be or have signals to be short the Dow Jones while long the NASDAQ? or at times during the day. So I do not believe it's an issue. It's not an issue at a lot of firms that even call out that you can do that. But by all means, if you're doing one and then two and then another one and then three, and you're just doing it at increments of loss, I would not be engaging in that type of behavior. So, question about gold in comparison to the white. So that's one of the things I'm doing in this new series is that I do not trade. I only trade one stock index per day, and then Bitcoin Bitcoin and gold. And if you do that, then it's not a problem. So those are not considered correlated. So to my knowledge, you guys seem to know a lot more about the details of the rules at a lot of these firms than I do. But to my knowledge, that should not be a problem. If you just trade YM in gold or Bitcoin in the MES, and it's all obviously fine if you're trading the MES and the MYM and you're trading them both in the same direction, that's fine too. All right, we got about 20 minutes left. Fire off any more questions if you have them. I didn't expect today to be a day where, and I'm not saying I would be out of this Dow position to invalidate whether it makes money or loses money. It doesn't. I'm just telling you that's the way it is. You can think, well, point that out, and then if this loser turns into a winner, or if it goes higher. If it goes higher, I'm going to cut it. If it comes back down here to profit, great. How much higher? I'm not sure, but kind of anything higher. Getting rewarded a little bit on this NASI, which is not great, but at least.
Order filled. Order filled.
See, so as an example, today, I have only ever been short in these prop program. Now, I don't think they give a shit or even look on evals, but I'm doing the same thing. I just want to make sure that it's kosher. So, short Dow Jones, short NASDAQ. That's not a violation. If I add to this position, it's only at this line right here. So I haven't gone through this strategy at all today, or I haven't heard any questions about it. But for the purposes of these streams that I do and in my trade room, I am teaching mean reversion trading. Mean reversion trading for small accounts is the easiest that I have found to get people familiar and comfortable with managing unprofitable positions and understanding where they are in the market. Trend following is fine. It's a little bit more difficult to identify a trend on what time frame. Breakout trading is fine. That's your lowest probability kind of thing. Support and resistance, or whatever you might call that. I have versions of that. It's called the range trader, where it's just our support and resistance is essentially the whole range for the day. We find resistance at the prior session high. We find support at the prior session low. Not really assigning a whole lot of value to these visual price patterns that people tend to scale out on their charts there. Yes, thanks. Adam is pointing out that we do have Broadcom, which will be a big deal. I don't think Costco and Lulu is going to be a big deal, but I think Broadcom should move the NASDAQ around shortly after the close. So thank you for reminding me of that. So I have a course. It's a free course. It's called the Futures Fanatic Foundation course, and you can get it. You can get it on my website. So it's not readily, you have to kind of hunt around a little bit. So if you put in your information there and say, I'm ready to learn, or it's right here too. Hey there, fellow speculators. My name is Rod. I have a small YouTube channel here called Futures Fanatic and a website called tradersdevgroup.com. God damn, my SEO guys are just going in and just, I think this page looks like shit now, but I don't know. I guess it's better for SEO. So anyway, here's the course. I don't sell bots or indicators or hopes and dreams or anything like that. Just the trade room for where you can practice all the skills that you need to practice on a daily basis with someone who's done this before, and I think can do a pretty good job of mentoring you if you're looking for a trading mentor. But the course itself does get into the trading strategies a little bit. But the best thing to do is to grab the ebook, and the ebook will point you towards a bunch of other free resources that will go through the basis of this. Another resource is my my TradingView page. So if you go to my TradingView page and you go to ideas under Rod Casilli, go through these ideas, and I teach you'll see that it's the same strategy with bands on it or the extreme turn on a higher time frame. So you can check that out. What do you think? Are we going to get lucky? I don't think so, but maybe we do. Just got lucky. I believed your deadly lies. The best resource for figuring this all out is on my YouTube channel, though. And it's also, again, there's the links to this. Speaking of meta, rod on rod action, baby. Get you some rod on rod action. You're going to go over to videos here, and you're going to look for this one called Situational Fluency Workshop. Thank God I barely create any content. It's hard enough for me to find anything. All right, right here. So you're going to grab this one. And let me just show you. Are we on the right screen? Shit. Sometimes I'm on the wrong. No, I'm on the right screen. Okay. So this is everything that's covered here. So setting your daily risk budget, which is the most important thing. It's supposed to be minimized. Setting your daily risk budget, understanding volatility via the average true range. Then we go through the range trader levels, identifying the T-line, day trading levels for the range trader, volume point of control, rule of projection, and then this is the stay in your lane strategy, the one on the right. Okay, so this is about 3 hours long, but I think it's some pretty good relevant training. If you watch that, you'll have all your homework ready to come on in. All right, there's some buying in the market on close orders there. Sarb, I don't know the answer to that, but I wouldn't trade like that either. So if you have levels, all you're doing by doing that is just distributing assuming that you're holding the initial position at a loss. Now you just have 3 accounts that have 3 different cost bases with, I would suggest not doing that. I don't know if it violates anything, but I don't know what you're getting from that. The better thing, as I've shown, is either decide to have a copier on or not. You know, you're either copying a lead account or not, and you could have various different copy groups. There's a lot of ways that you can look at making those types of decisions, but you want to enter everything, meaning if you're entering long or short gold, put one contract on in all those accounts or in one account if you're not using the copier, and then manage that position in that account. The thing that you can use multiple accounts for is to walk forward test trade management, managing the same trade once you're profitable or not profitable. Especially if you're profitable, you can go, okay, I'm going to trail a stop on this one, I'm going to take a profit on this other, and I'm going to wait for an extended target on the third one, if that makes sense. But your entry is all the same price. So maybe I misunderstood what you're doing, but I would not suggest doing something like that. What would cause someone to be flagged using PropShop Trader while still winning? They have 2 or 3 rules that could cause that. You can be flagged if they have a consistency rule. You can be flagged for consistency if you're winning. They do have some large trade stuff, which is sort of the similar to Apex's windfall. You could be profitable but have had what they determine is some windfall trading results. You can have the hedging issue that I described. You can be wildly profitable, but for 25 seconds you had 2 correlated instruments in different directions, and you could be hedged. That you could be highlighted there too. On the MGC for Ninja, I use 11x2. I basically use an 11x2 on everything except for the MES. And the NASDAQ, I have switched to a 16x4. So for crude oil, for Russell, for Dow Jones, for gold, I use an 11x2. All right, this is the live account. I am going to close this in these props here.
Order filled.
I might hold it a little bit longer in.
Order filled.
So we're pretty green in a lot of these accounts today.
Order filled.
Even with that relatively big loss in the Dow.
Order filled.
All right, we lost in that account. So again, thanks to Adam reminding. Broadcom could definitely move the NASDAQ around a little bit. Don't believe Costco or Lula are going to do anything to the market at all, but maybe a little sense of the consumer. If I had to judge from the Costco in my neighborhood, things are going well. I don't even turn down that street like almost ever during the middle of the day because the thing is packed from the moment they open. People go in and get their gas. Gas it up. Let's gas her up. All right.
Order filled.
Same thing on the take profits.
Order filled. Order filled. Order submitted. Order filled.
A little sell off in the NASI.
Order filled.
Helps out a little bit.
Order filled. Order filled.
See, that's why I try not to think too much, because if I was a thinking man or a betting man, I would have looked for a little ripper close, but
Order filled.
a little bit of selling here.
Order submitted. Order filled. Order filled.
All right.
Order filled.
You gonna give us anything to root for, Dow, on the longs, on the short side? I could still see the S&P going up to close at 12 half. 12 half, 10 to 12 half. That'd be up there at the plus twos. I keep talking that way so I can push it down. Yeah, Jeremy's mentioning kind of does the same thing. This world we're living in now with all this choice and all these accounts and various different connections and copiers, and it's overwhelming for some, but as you build your career and learn how to manage risk and learn a strategy that's working for you, I would suggest checking out mine if you've struggled. Then you can start to stitch all these little components together and eventually some of your own live accounts as well. And you're not purposely trading them against each other or anything like that, but you're aware of where you are in the market in a variety of different accounts, and you can make some decisions based on that. And one of the things, look, for 2.5 years, I just passed and canceled all the prop programs. I used them as a trading, as an education thing. And for the first 1.5 years of the copiers, I didn't believe in the copiers and use them either. I thought, oh, we are getting further and further and further and further away from real trading. Well, once I got back engaged with that and saw the opportunity and the way I could teach it as well, I was like, well, technically, if someone's going to give me money from a simulator, that simulator is a real account. So if the market starts to come down to a level and the Nasdaq's tanking and I'm already got a short position on in some live accounts and I start to buy in funded prop
Order
accounts,
filled.
am I hedged there at that point? Yeah. All right, look at that. Nasdaq did pop all the way up to, the Nasdaq popped up to, popped up to 730s, huh? Glad I was out. All right, there's straight up 8 o'clock. Excuse me, 8 o'clock. That's what I always say in the morning. There's 1 o'clock. I'm going to hold this Dow Jones for a little while longer, but you don't need to watch that. How to find my trading results and prop check, you can figure it out. I'm not here to provide that kind of customer support. You can figure it out. You can see your trading results inside of Tickblaze. You can also see them. There's I'm not going to get into it. Just go into the website. Pretty simple. You'll figure it out. All right, everybody, stay green and trade like you mean it. I don't stream on Fridays, but if you do want to join the trade room tomorrow, the password is Frosty. So I might or grab my ebook or the Futures Fanatic course or anything like that. You'll get an email. I will send out an email reminding people about the free look for Fed Week thing that starts tomorrow. All right, guys, stay green, trade like you mean it. See you at the next one. Be good. Bye-bye.